All right, let's do this. We're live. Good morning, everybody. This is the morning show here on Stock Market TV. Spencer, JC, Steve, Rick, full crew with you this morning. We missed you guys yesterday. How did everyone do this weekend? Okay? Got away from the screens, got outside, I hope. Didn't spend all weekend staring at charts. Maybe some charts, but you know, other things too. What should we talk about today? I want to set the stage for earnings this week. We have another big week on that front. Walmart is Thursday. That kind of sticks out to me. We'll talk about that kind of today and then throughout the week because Walmart is Jeff Mackey's most important earnings report ever. So we'll talk about that. As far as like futures go, you guys want to talk about gold down here this morning a little bit, right? The 2.25%. We're in the red, but nothing too crazy. It's kind of just a normal Tuesday morning, right? That's my sense of things. But I know you didn't come here for that. You came here for JC, you came here for Steve, and you came here for their charts, and they're both here. So let's bring them out. If you're watching us on X, hello. If you're watching us on YouTube, hello too. And do me a favor, hit the like, please, and thank you. All right, here we go. Oh,
good morning.
JC hiding backstage for a few. Okay, I'll let you hide. He can hide. How was your weekend, sir?
Long and very relaxing. How about you?
See, you always do this. You always complain about the Monday holidays, and then you're like, "Oh yeah, it was great. Yeah, it was awesome."
It was a nice weekend.
Right.
We went to a farm.
Great.
Hung out. How about you?
It was great. JC, you want to come out of hiding? Yeah. Cool. Welcome.
Hello, gentlemen.
Hey, how we doing?
You know, I remember 20 years ago or more.
I don't.
Working on President's Day, like going into the city, working in the city, like that. This is like a big, like for young, I remember. And this year, I actually worked also. We didn't go up to the lake house. Our pipes froze, so we've been dealing with that. So I worked yesterday. It was great, by the way.
What is working? Like I reviewed all of my 2026 trades.
For me, it was like shit I had to do and shit I like to do, which is, probably a good combination, right? So I looked at a lot of charts. So that part I like to do. I had to do like accounting shit and like other stuff that I don't like to do, but I got, you got to do it. It's life, right? So I was good. It's great. I got a question, then we'll get into the market. So here's the question for the Italians, right? Spencer, you can weigh in too because you're from Jersey, so you're Italian by
like association.
Yeah. Like Miami Jews are kind of Cuban, you know what I mean? So it works the same way. So I've been doing like the ground beef with onions and garlic, little tomato sauce, right? Just to get just a whole lot of protein in, right? I love it. It's delicious. It's easy.
Yeah.
Here's the question: do you top it off with Parmesan? Do you like grated Parmesan? Do you top it off with shredded mozzarella or both?
It depends on who you are.
Right.
Some people would want neither, and me, I would want both. You don't
I
want
had
to do
two helpings yesterday. The first one with Parmesan, the second one with mozzarella. I'm thinking about doing both.
At that point, you're talking about like, how do I top the spaghetti? Like, do I put Parmesan cheese on it?
More of a meatball than a spaghetti.
You can, yeah.
More of a meatball. Spencer?
I think this is such an advanced question that it almost doesn't matter. You've already gotten the broad strokes right?
You're not wrong. You're not
wrong. If you're
wrong.
asking about which cheese, it's almost like if you've put on a trade and you've doubled your money. You're like, oh, how do I manage this last slice? It's like, don't worry about it.
Don't screw it up at that point.
Yeah.
This is a question of customization and preference.
You already did good. Don't overthink
So here's what I'm thinking. I'm thinking because I got a ton of leftovers, right? That's the point. Just make a whole bunch. It's easy and cheap. So I think what I'm going to do is I'm going to get balls of fresh mozzarella, throw them in there, and then sprinkle the Parmesan. I think that's what I'm going to do. Kind of like how they put the mozzarella in the middle of the meatball, kind of like that.
Look, if you've ever caught yourself obsessing over like the last slice of a trade, you've already sold out of the rest of it, and you're like, oh, what do I do? Don't stress.
By the way, it's a good cheat code if you're on the Perlman program to just make a whole bunch of ground beef with onions, garlic, a little bit of sauce, and just have it in the fridge. It's a good cheat code there.
That's my every week. All right.
Shout out Phil Perlman.
Speaking of the Perlman program, I picked up five pizzas from the new Rico's Pizza location in Naples. This is a Stanford-founded restaurant that basically copied the recipe and style of Colony Grill. And that happens all the time. Nobody's mad about it in Connecticut. This is a very common thing. In fact, like we get restaurants down in South Florida all the time. They're like, oh, this is New Haven style pizza. Great. Let them copy it. But I mean, they copied the hot oil pie and everything to a T. Dude, it's like 95% there. So good.
Good for them. Good for them. Shout out to the Florida men out there making things happen, bringing the good eats from the Northeast down south. Yeah. Good eats in the Northeast. All along. You go all along the coast. Good eats. Like go up towards New England. I mean, there's only 3 months of the year that you want to be there, but those 3 months are great.
Yeah. All right. Should we dance?
I think we should.
All right. Let's dance.
Right, ladies and gentlemen, the market is open once again. You know that my opening bell went off yesterday when equities were closed. That was interesting. So my opening bell on Thinkorswim, I still use Thinkorswim for my watch list, believe it or not. My watch list is so old that I have 4 Qs in my watch list. 4, right? So we got the Dow futures this morning down 100. So let's see. We got 49,472. So over 500 points away from Dow 50,000. Just an FYI. S&P 500 down 40 bips. 6820. Still struggling with that 7,000. We keep talking about it. We'll talk about it again today. The NASDAQ 100 leading the way lower, down 200 on the NASDAQ 100 futures. That's 84 basis points, 24,600. We got 30-year bond futures up. Interesting, as yields are rolling over there, 2-year making new lows. 30-year bonds are up again. That's really interesting. This is somewhat maybe a new development here that we're seeing. 118.5 or so. Crude oil futures up another full percent today, 63.40. Copper down 2%, 567. Holding below that 6. Gold futures down 2%, 49.35. We got silver down almost 5%, back to 74.25 with the VIX up, still above 22 for the S&P 500 volatility index. Bitcoin down this morning about 1%, 68,000 even. You got Ethereum 1985 down 0.2%. You got Solana this morning 85 down 1.6%. That brings the total crypto market cap, Mr. Spencer Israel, to 2.31 trillion. How do we feel about this morning's futures?
Robert, it's a different Rico's, and it's with a K. And I love this lazy red open following a 3-day weekend. You know?
Could have hit the fan.
You think she's going to hit the fan?
No, I'm saying that over a long weekend, right? Over a 3-day, anything can happen, sure.
Right.
One Trump tweet, one missile launch, right? I mean,
you know what? It was an oddly quiet weekend on the news.
Very quiet.
Yeah. Oddly quiet. My question is, was that the low of this move for Bitcoin? It's been now, what, 2 weeks?
I think so.
60,000?
I think so.
That was it?
I want to say how happy it makes me that Spencer Israel, first thing he brings up is Bitcoin. That doesn't happen all the time.
Well, the chart's up on my, I have 9 charts. One of them is Bitcoin. So,
JC, is Bitcoin the single biggest risk appetite data point to track right now? No. Or you want something more like Staples?
Like evidence of risk appetite versus risk aversion. Bitcoin's another software stock, so you could just group it in there. Throw up slide 2, please, Spencer, the new slide 2. I mean, to me, this is the chart of, this is maybe not the chart of the week, but definitely in the conversation to kind of all your points. Bitcoin's just at a really critical level. So yes, is there information on risk appetite here? Most definitely. I think this is big for technology. I think it's big for software specifically.
The growth
These are those 2021 highs. This is the Bank Salmon Fried top there.
Yeah.
Right.
I think this could be a big data point for growth trade bottomed, right? If Bitcoin bottoms. That's what I'm thinking.
I mean, listen, there's the key word here, guys. I hate to keep being that guy, but I'm going to be that guy. The word here that you're looking for is dispersion. How many times are we going to talk about that? You notice how
we're having internet problems. He likes dispersion. One might say bifurcation. Bifurcation's another one.
You're back.
Yeah, bifurcation.
Mixed market.
I mean, Grant was saying the same thing in the Daily Number this morning, right? He was talking. It's different words for the same concept.
You know, I've been thinking for a long time now, like when this growth over value regime finally ends, so we knew it would have to, at least for some period of time, right? And value would come back in favor and show some leadership over more sustained time frames, like we're finally seeing. I used to think to myself, like, what could possibly cause that to happen? Right? Like, what could that story be that would make people want industrial metal stocks more than software? And it's ended up being AI. I mean, is that incredible or what? Like, if you really take a step,
what do you mean?
Right? The story behind the value over growth rotation is this whole, we don't want asset light companies anymore. We want asset heavy companies. We want the companies that own the planes and the heavy equipment up above. They can't be disrupted. In the past, it's been the complete opposite. We want the companies with the highest margins who just have employee comp expense, right? And incredible operating leverage and sell subscription services. Now we've seen this huge switch. And I wouldn't have guessed, because it's always how it works, but I wouldn't have guessed a couple of years ago when we're just getting excited about this AI revolution that, oh yeah, value finally flips growth. And it's literally driven by a technological revolution, AI trend. You guys not get what I'm saying here?
You're saying the irony in it all? Right?
Yeah.
I mean, yeah, it's ironic. I think it's fascinating. You know, the market and us included, kind of common sense as a human, like, oh, this AI is going to be great for tech, right? And your point is the irony of it being the worst thing for tech.
It's
good for other things.
Now it's what we're pointing to and saying, yeah, of course value stocks are outperforming tech stocks, right? Because of AI. You wouldn't have had that on your bingo card. Josh Brown has been pounding the table on a new acronym that he's calling HALO. I think it's just it's excellent. He's talking about heavy asset, low obsolescence businesses.
Low what?
Low obsolescence.
That word's too fancy for me.
Can't be disrupted.
Obsolescence? That's a word?
Yeah.
That is a word.
That is a fancy word.
Big one.
Shout out to the chat.
Write it down. Remember it.
We're getting fancy over here. What was the one? Obsession. What is it called again? What was the word again?
Obsolescence.
Can we spell it? Can we put it in the chat? Somebody spell that.
OBSCE.
Check it. Check my math.
JC,
I won the spelling bee as a kid, dog. All right.
No, you didn't.
JC,
came in second.
If you've ever heard of
nerd alert, I was never invited to spelling bees.
JC, if you've ever heard of planned obsolescence, it's the idea that companies sell products that they design to only last for X amount of time, like the iPhone, so that there's a new iPhone you have to buy in 2 years, right? And they know that. We all know that. So that's the idea of planned obsolescence. So Josh's idea is like obsolescence for the business, meaning to what Steve just said. Someone else is not going to come around next week, next month, and next year and just make them obsolete, right? Yeah, obsolescence would be like, I guess, the verb of obsolete.
Fancy.
Good job, Spencer.
Let's throw up those heavy assets. Yeah. Throw them up, side two.
Shout out Bonds, by the way. Shout out Bonds. Love to see it. You know, Bonds deserve a little ripper. No, it's been a long time,
dude. Been a minute. Throw that up. So here you go. There's your heavy assets. This is that Josh's Halo. That's just this month, dude. You want to talk about dispersion? Damn, son.
It probably looks it probably looks better if you go back another month. If you go back to the start of the year.
Yeah, man. Wow.
That is pretty intense, man. This is just in February. It is February the 17th. And look at these returns and look at the differences. This is a year that we just had in 2 weeks.
You don't see this every day. And I think it's fascinating that financials are being treated like growth. And it makes sense in a lot of cases.
Well, not all financials. Throw up
a lot of them are asset light.
Throw up slide 5.
And they do have disruption issues.
But here's what's really interesting is
data companies.
Think about the bifurcation or the dispersion just within financials, right? So we look at financials and broker dealers and exchanges. Look at the NASDAQ getting smoked. Not the NASDAQ indexes, the company, the NASDAQ, NDAQ. Look at ICE, which owns the New York Stock Exchange. Again, not the New York Stock Exchange Composite, the company that runs the New York Stock Exchange, also getting smoked. Broker dealers and exchanges.
I don't like a lot of that. I think what you have to check when you're looking at that group, JC, is how much money are they making off of data? Because their exchange businesses are not disruptible.
Throw up the next one. Throw up the next one. Strazza's right. You got Moody's, MSCI, S&P Global getting smoked too. But then you got the CME group and the CBOE, which, combined, they probably clear a lot of money, all things interest rates, futures, everything, options, they got their fingertips and everything. Both of them hitting all-time highs. CME group is a monster, $100 billion in market capitalization. CBOE about a third of the size, less than a third of the size, under 30 billion. But similar story here.
And I just want to mention while we talk about this group, Virtu Financial is a really interesting one. Check it out. I think you got a nice little tactical reversal there. This is a special company. I don't think it's disruptible at all. And they pay a 2.5% dividend yield. Hey, another one, JC, that I think might be safer than anybody is the big banks. I think the big banks,
throw up the 8. Throw up slide 8 there. And you want to talk about the big banks are the biggest opportunity? How about the little guys?
I think the big banks there's very little disruption risk there.
This is the most bullish chart on earth right here. This is small cap finance.
Aren't the big banks value?
SCF.
I went a little viral over the weekend, by the way.
Wait, aren't the big banks
traditionally sure? But they've been grouped in this, big AI beneficiary.
Probably not the data stuff.
I am so confused right now.
No, they're values. They're value. I don't want to confuse you. They're still value.
Okay, but we move stocks from growth to value and back again every other day, and it's wildly confusing.
I talk to fundamental analysts, believe it or not.
Yeah.
I know you guys some people don't believe that, but I do talk to fundamental analysts. Some of them are my friends.
And God forbid you have a stock that is both growth and value.
They don't change it. They don't agree with a lot of the way the indexes treat value and growth. They have their own data sets.
Right.
Who does?
Fundamental analysts that I talk to. They don't just go by value growth like the Russell says.
Yeah, it's an imperfect system. I think we can all agree.
Probably the same way that we don't just define uptrends and bull markets and bear markets like anybody else, right? We have our own methodologies. Fundamental analysts probably do the same thing, right?
So just to recap here, traditionally financials are value. Value is going up right now. Financials are going down right now. So that doesn't make sense. Traditionally, big banks are value, but big banks look good. So big banks look different than the rest of the financials, and it's so confused. You see how I'm confused?
Because the drivers of these relative trends, it's far more nuanced than just a basic, high level value versus growth analysis.
In large cap value, financials are the largest weighting in the Russell 1000 large cap value. Financials are over 20%. It's the largest one. For perspective, industrials are only 13%, with technology and healthcare right down there, and then everything falls after that. And then on the small cap value, Financials have an even larger weighting at 25%, and industrials and all the others have even lower weightings at around 11%. So financials dominate small cap value even more so, which this is what this is. This is what I think is the most bullish chart on earth in terms of which chart has the most bullish implications. Not so much saying that this chart means we should be bullish. It means that the bullish implications of this chart resolving higher, I think, has the most bullish implications of anything else I see out there. And throw up the next slide so you can compare with the Russell 2000. If you're wondering what's going to be the driver of small caps and in general stocks in general, I mean, if the Russell 2000 is ripping higher, the large caps might be underperforming. The large caps might not be making much progress to the upside, but are they getting smoked? Probably not, right? So I think just generally it's probably indicative of a relatively healthy market if small cap indexes are absolutely ripping. No?
Good chart. Yeah.
So this is the conversation that I was having on Twitter. Went a little viral this weekend. Have you ever gone viral, Strazza?
Oh yeah. I don't dabble too much on the Twitter these days, but oh yeah.
And viral, like, I'm not like a big deal or anything like that. There's real virality, but like in my little world, like, you know, there was like 500,000 impressions or something like that. Like I've never gotten, you know, that sort of, I don't think I've ever gotten like that.
I think you do pretty well. I think you do pretty well, my friend.
I remember like when Josh Brown like went viral for the first time, I think Alec Baldwin like retweeted him or something like that. And Josh just went bananas.
That's financial crisis stuff.
Isn't that funny? No, that was way after that. Okay, I want to talk about a chart that was put up by Nomura, which is really interesting, making the rounds. Macro chart was also talking about it this weekend. It was making the news in the Dow Jones. You know, the Dow Jones, there's slide 4 there.
Yeah.
So this is the absolute return dispersion.
There you go.
On a 1-month basis.
Hey, there's that fancy word again.
It's super fancy. We are so fancy here at the morning show. So here we're looking
Nomura, shout out big bases, by the way. Shout out to big bases all around the world.
Shout out Japan.
Yep.
You know, shout out all Japanese things.
Yeah, hey, Japan.
He's going to get a call from Jim Bianco. Yeah, tell him to call me. He owes me a phone call.
Did you see those beautiful ice skaters from Japan last night? Oh, my goodness. I hope they won. That was just incredible. Beautiful. Makes me want to cry watching these figure skaters.
I like it when your sensitive side comes out.
Oh, my God.
Hey, just again, I want to point out a couple of things because people are like, well, JC, is this bullish or bearish, this dispersion that you speak of? And so, you know what I did is that I went back and I looked. Can you believe that? People still do that. And I pride myself in going and looking.
What'd you find?
We've seen this a bunch over the years. We saw it during the great financial crisis, but we saw it in November and December of 2008, a couple months before the market bottomed.
Yeah.
So the forward returns over the next year were like off the charts because it was right near the bottom. You also saw it in the dot-com bubble, but again, almost a year later, after the bubble peak. So that was interesting. And then you also saw it in at the end of 1998.
So you're
which
seeing
you had a great year in 99. Then you saw it again in April 99, right? So like so it's not the answer for somebody who went and looked.
How about the readings in 2020, JC? Were those around the COVID lows too, around 2020?
No, we didn't see it. No, we didn't see it. Based on this study, which is looking very specifically at the average 1-month absolute move by stock compared to the index itself, which is flat, right? So the point here is that it's not good or bad. It's not bullish or bearish. It's just different, right? That's the answer. I went and I looked. You could go look too. It's all free data. It's all there. You could go look too. You'll see like it's not bullish or bearish. It's not good or bad. It's just different. It's just different, right? Jay says very bullish. Very bullish if you are going out of your way to identify risk versus reward opportunities very skewed in your favor versus just sitting around in an index, right? Because if you're in an index, you're not making any money. But there is a lot. You know that the median stock in the S&P 500 this year, Strazza, is up 7.5%? The median
is up 7.5%.
Yeah.
That's great.
You know how I know?
It's not. It ain't bearish, dude.
You know how I know?
Because you did the work, dog.
I went and I looked. I'm like, I wonder. And you want to know something else? Like 220 of the S&P 500, almost half the S&P 500 is up double digits this year. Think about that. Remember they were just telling us a couple months ago that it was just 5 stocks or 6 stocks or whatever it is? How funny is that? I find humor in all that sort of thing.
Breath has been interesting. When I went back and did my trade review, I'm very critical of myself when I'm looking at like what I've done. And one of the things I was kind of kicking myself about is I was like, dude, you totally misjudged the breath situation. Because what I did earlier this year is I looked at the improving market internals. I said, this is super bullish. And instead of taking that information and saying, I'm going to lean the hell into all this new stuff that's working and make that like my big overweights, I looked at the stuff that stopped working and said, breath is so good. These things got to get off the ground here and start working too. So I was looking at like the large cap tech stuff, right, that had been weakening instead of all the value and cyclical stuff that had been strengthening. And I used that strong breath, thesis, and then did the wrong thing with it. I looked back at what I was doing. I said, you asshole.
You asshole.
Another just announcement here for the chat. I see someone heckling Brian Armstrong, which we don't do here because Brian Armstrong is a great operator. And another reason why I think these are poor comments in the chat talking about the insider sales from Brian Armstrong. Do a little work, and what you'll find is that
Did you do the work, Strazza?
Yeah, let's do some more work. We'll do it live. Brian Armstrong holds over 24 million shares. That represents about 14 to 15% the outstanding shares for Coinbase. It's a ridiculous ownership interest for one guy. Okay, this is just one human being.
He owns 14, 15% of the entire company.
He just sold like 1.5 million shares or something over the past couple of weeks or months out of 24 million. Okay, you have to do that when you're in his position.
He's worth like $6 billion.
How could that be?
He's worth that much? I didn't realize he was so rich. Good for him.
Is that right?
Well, if he owns 15% of the company, it's a $45 billion market cap.
That's right. That's right.
Wow. And he was worth twice as much a few months ago. Wow. Well, that's got cut in half. He was up almost double digit. He was worth almost $10 billion at one point. That's wild.
So good for him. And the point is, you don't want to overthink the sales. These guys have to systematically sell stock because
let me tell you how I learned it.
Anything else would be irresponsible. JC, tell him, please.
This is how I learned it, because insider transactions was one of the first strategies I ever incorporated in my entire career. Start in 2003 when I first started. I was looking at insider transactions. Here's the story. There are a million reasons why somebody might want to sell their stock, right? Diversification, planned sales like Strazza is talking about with their financial advisor. God forbid they have a financial advisor who tells them every day, sell stock, you idiot, sell stock, you idiot, yes. Sell stock, you idiot, right? So God forbid you have a little different. Pay for a daughter's wedding, a college tuition. There's a million reasons why an insider might sell some stock. But, and here's the big one. There's only one reason why they'd buy. And it ain't because they think it goes down, right? There's only one reason why they buy. With few exceptions, and Strazza is the best in the business at identifying when they're just buying it to save face and be like, oh, we're buying, and they buy like a little bit of stock. They come out of a board meeting, and like the CFO, the CEO, the COO, they all buy like a little stock, but nothing big. Yep. They're just like, it's all a charade. That does happen, but that's the exception that makes the rule. How do I do, Strazza?
No, it's absolutely right. And somebody says it's bad taste to sell down 50%. Get over it. Okay? It's not about you.
Remember his cost basis is zero.
Don't let it hurt your feelings. He's going to keep selling stock forever.
Facts. Okay? Facts only.
Forever.
This will happen again.
Oh, God. And then one last thing on the AI, and then we'll move on. I know we got Kenny. Because I saw Goldman Sachs's list. Okay, I heard about Goldman Sachs's list with the winners and the losers in software. If you are making the bet that AI is going to replace one of these big software companies, you're making two bets. It's A, that let's use Intuit as an example. This is one of the losers Goldman picked. You're not just making the bet that, okay, robots are going to do accounting and your taxes better than Intuit's software in the future. That's the one. That's step one. You got to clear that bridge in your mind. And then step two is, and Intuit is not going to be the one who owns those robots. Intuit, the company who's already the industry leader and in a clear, position with an advantage, first mover advantage, and all the money in the world to invest in AI, to have the best robots, to do the taxes in the future, to replace their own business. Does that make sense? Because a lot of times we see companies almost get disrupted, but then they disrupt themselves and reinvent themselves. These big tech companies have been doing it for decades now. The good ones.
A lot of CapEx. Look at me.
It's not just as simple, right, as saying this company will be disrupted by the robots.
That's a word that you don't hear me say.
But then you have to agree in your mind that they're not going to own those robots in the future. In many cases, they will. They'll disrupt themselves. So be careful of that. A lot of just selling without any questions being asked in software, in a lot of groups still. It's pretty wild. Pretty wild.
I say we bring in Kenny Glick, see what's happening intraday. Things are moving.
Keep it moving.
Woo! It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick, do you keep it 100?
I don't know, but I'm going 100 right now.
Dude, that is a nice hoodie, man. Where do I get one of those? Dude, where did that come from?
It came from the wonderful world of Mary.
Mary sent that to you?
Yes.
Dude, shout out to Mary.
We got a bunch. We're going to Vegas. We're going to be a bunch of walking billboards. I got a bunch of t-shirts.
Who's we? You and Mary going to Vegas?
Oh, I wish Mary was coming to Vegas. Hey, now. No, but it's just me and 30 hit the bidders, right? And our TikToker friends. Yeah, we're going to go storm into Vegas. We're all going to be walking around like with t-shirts. I got a couple of VWAP presentations on Tuesday. And then we're
partying. What conference are you going to?
The Day Traders Expo.
The Day Traders Expo?
Well, I think they call it the Money Show now.
Oh, but it used to be the Day Traders Expo?
Yeah, it used to be back in the aughts, if you will.
Wasn't there a guy back in the day who would show up to those things with a bunch of strippers?
Maybe.
Wasn't there a guy who used to do that? Would just show up to these conferences like with like an entourage of ladies of the night?
Yeah, somebody should have told him to shave his head back then too. What a terrible hairstyle I had going.
That's wild. Those are some wild times over at the Marriott Marquis in Times Square.
And now they can't kick me out because I'm a speaker.
Now you can't leave.
I got the fancy red banner on my tag now, on my credentials.
Dude, you're so fancy these days, Kenny. Let me ask you this. Where am I going to get one of these hoodies? Do I got to tell Mary to send me one?
Yeah, well, now that we did the test run, we'll take it serious. Maybe we start selling some swag, or give them away for when you guys get your yearly subscriptions, get a free hoodie.
Oh, I like that idea, Kenny. Yes. See, now who's thinking?
By the way, it's Champion, only the best.
Oh wow, that's cool. I didn't even know that company still existed. Shout out to Champion. Hey, Kenny. So we got the Nasdaq. I don't know if there's a break in the matrix here, but I see the Nasdaq in the red.
Yeah, I came in short over the weekend.
I see that right.
Friday was probably the number one trading day in the last year. I would assume, because we were so damn savvy. Speaking of savvy, we came in short, and we came in short the Qs, but long Coinbase. We were with you guys on the schmooze. That was my favorite play, maybe of the decade. Because I'm not a fan of Bitcoin, but I thought the Coinbase was a little bit overdone because they were throwing it out like MicroStrategy. Great buy. The CONL turned out to be a 10-bagger on the options. The rig having the $6 calls for about 6 or 7 cents. Those went to about 55 cents. Cisco made up for the lack of activity the night before. Cisco ripping 2.5 points on a Friday. And again, what I've been trying to explain to everybody that to make 100% or 200% on a trade, it's not just this hard thing to find, especially when you're trading on Friday. And you don't need a stock to go up 400 or 500%. You just need a rig to go up 50 cents on a Friday with some well-timed $6 calls for, a nickel or so. And they go to 50 cents and That's how you do it. Cisco's $76 calls were 20 cents. They went to $2.50. Coinbase, the CONL, the $6 calls. I mean, some guys had them at, I forgot which one was 2 cents. They went to, almost like $1. It's 50 times your money. So it was just an extravaganza on Friday. So you roll in today and, the Qs sold off at the end of the day, which was kind of weird. But UVXY was even weirder. UVXY rallied into the close, telling us that something's different about the market.
Said that if that starts going.
Yeah. And, again, it was out of nowhere too. So it was like that fear just showed up and people were afraid to hold over the 3-day weekend. Now, here we are. We've already covered. Let me show you the charts.
Would you agree with what Strazza and I were talking about before, and Spencer also for that matter, that the market was surprisingly quiet over the weekend?
Well, you had the futures open for what? You had the futures. I actually have my screen. My computer's all busted up. Forget it. We won't look at charts anyway. But it was sort of quiet. Yeah. The futures were. You had some decent selling. When they opened up Sunday, they were green, and then when they went red. So that wasn't nothing. Again, that show you that the sellers were still out there.
Because the Dow was up like 200 yesterday during the day, and then gave it all back.
Yeah. Well, the thing about again, this market right now, it's not weak. That's an illusion, right? The Qs right now are being used as an ATM machine.
The market's weak.
You're weak. The market just hit all-time highs. The Dow was 50,000. I think it was like 4 or 5 days ago. So let's not be delusional now. But the QQQ is being used as an ATM machine. People are cashing out and putting money other places. That's all it is. It's another slow motion rotation, and it's fantastic. I mean, the market is just. By far, this is the best trading. I keep saying it every day because it's true. You're finding opportunities for the day trader, the guy that just wants to get paid for the day. It's not hard to find some ideas. And if you just stick with the same ideas, like going back to Cisco, going back to the Coinbase, and going back to the same trades, and now you're going to have single stock futures. Come on now. So it's going to be insane when we start looking at every stock's going to have their own futures contract on earnings.
Not every stock.
Well, not every, right. They're going to start, and then inevitably it'll start to spread. But it's not.
I mean, there's precedent to all this, right? And you could go to India, and in India, they got about 120 stocks that trade futures because you can't short stocks in India on the Bombay or in the national exchanges like our NASDAQ and New York Stock Exchange. You have to short the futures contracts on those stocks, and there's only about 120 of them. So there's precedent to that. You can go see what that's kind of like. So I'm really looking forward to, and then, again, just the evolution of markets just kind of remains the same way. They just keep continuing to create new creative ways for humans to blow up their accounts. Right. Yeah. So I'm all in favor of that sort of behavior and mentality, and, more humans blowing up their accounts out there. And I don't mean just individual investors. That doesn't matter. These are big institutions that are going to be blowing themselves up. And that just creates more opportunities for all of us, not just Kenny as a day trader, most definitely Kenny as a day trader, but in general on multiple time frames for all of us. So it's great.
Yeah, I hope all these leverage products on the Bitcoin spells the demise of it all. But yeah, we'll see what happens.
Kenny, what's your favorite nickname?
Which one? The Warlock.
The Warlock is your favorite nickname. Okay, what is the second favorite nickname?
Stud.
Yeah, no, I don't think anybody.
Nobody calls you that. It's only in my head. I don't know. What's my favorite nickname?
You go through the whole alphabet, don't you?
The Abraham of Assets. That was always a good one. The Barack of Bread, Cain of Cash, David of Ducats. That was always. How about the Glick of Gelt? There you go. For you Yiddish.
Abraham of Assets.
Yes.
That's a great one. That's a great one.
What's the profit of profit? I'm bringing back the profit of profit for Vegas. Oh, it's going to be my opening session, or I guess my opening monologue is going to be a 40-minute just gospel. It's going to be insane. It's going to be nuts. So if you're there on Tuesday morning, make sure you sleep well Monday, because I'm going on at 8:30 sharp.
Woo!
Yeah, so get ready. So
and then Kenny today, if you want to see Kenny today specifically, the long and short of it, which is a great name. Speaking of good names, the long and short of it today on Stock Market TV at 11 a.m. Shout out Kenny Glick. What are you going to be talking about?
We're gonna talk about Friday. Actually, this whole week is going to be about what we witnessed on Friday and how to prepare yourself. And just that education meets preparation, meets the opportunity, creates your own luck. Some saying like that, right? So we're going to be doing a lot of review, and then leading into Saturday, where I'm getting together with the people on the website. This is usually reserved for members only, but we're going to open it up to anybody that wants to dip in, and we're doing it the opposite way. Instead of paying for the month or the year and you get the class, here, pay for the class, and we're giving you about a month and a half of our airtime included with the class. So if you ever want to join us for a Saturday session and get familiar with how we find these ideas, how to place the stops, order execution, all that stuff that you need to know about as far as day trading is concerned, this is your chance. And plus you get another about a month of my time. So if you're thinking about it, this is the time to make the plunge, take the plunge.
The greatest market of all time, ladies and gentlemen. There's only one way to trade it, and that is with the Warlock.
And VWAP,
the Prophet of Profits.
And you might get a free hoodie out of it. So, all right.
And VWAP we trust. And if there's a cheat code in this market, the VWAP is that. There's real information there.
It's exactly what it is. Yes. Institutional order flow cheat code. I love it.
Yeah.
All right. I'll see you guys later. Thanks again, Mary. Great sweatshirts.
Where's mine?
Well, you have to ask Mary.
Jeez.
Danny's holding
chop liver over here.
See you guys
later. Dude, champion hoodie. I would kill for a champion. I haven't had a champion hoodie. I'm from Miami. We didn't even have hoodies. I don't know that I've ever had a champion hoodie.
Yeah, that was I didn't realize that they already went out. That's a nice hoodie.
You are in on this conspiracy?
No, I knew that Kenny had asked for some swag. I didn't realize that swag had been made and ordered and shipped.
Good for Mary.
Yeah. So, that's awesome. So yeah, for everyone asking in the chat, the swag store is coming. Don't worry, swag store is.
And like, listen, it's one of those things where like you don't really make any money selling swag. It's just like it's good.
Yeah,
it's cool for the community,
but it's fun.
You know.
All right, Strazza, you want to talk about earnings?
Yeah. I sent 2 more charts in the morning show chat. Make sure they're in there.
Oh, okay. Let's do our newest segment, the beat drop.
Let's beat it.
Okay.
Okay. Coinbase digging in just like we suspected it would at this key level that we talked about last week. So just keep an eye on that one. I think it's going to rip and run here. This could be a $200 stock in the very near future. Report was just fine. We've already kind of covered it though. Just wanted to do a little follow up there, right? Really nice reaction. The stock was up, man, 20% at one point, closed up 16.5% Friday. So that's always good. This is the kind of stuff we see around bottoms, right? Positive reactions to not so great news. Next, that really stood out is Expedia.
Do we have the charts? Do we have the charts, please? Can you bring them up? 16, 17, somewhere.
We doing chart on.
Thank you.
How many warnings? All right. Expedia, this goes hand in hand with the conversation we were just having about which software stocks can be disrupted. This has got to be at the absolute top.
How are they still around after all this time?
How the hell am I not just typing into a chat bot or to even Google these days, hey, I want to fly from Key West to Texas between this date and this date. I want to go JetBlue. I don't want any layovers. I want a direct flight, and I want to go first thing in the morning. And then it returns me all of the best options. How is that not a thing already? So I think that it will be in the future, quite clearly, probably sooner rather than later. And Expedia obviously stands to get hit or be disrupted by something like that. And you're seeing it because, again, in a lot of these cases, you're not seeing deteriorating fundamentals yet. So they reported a double beat. And they were rewarded for double beats in the 2 prior quarters. But for this quarter, the double beat resulted in a negative 6.4% price reaction. Not good. Also, you have a major polarity zone here. So you don't have to overthink it. There was a big old base that broke out, late last year, right around this 200, 215 level, 200, 210. That's it. I don't think you could own Expedia below there. That's a major risk level. So that could make things easier for you. But look out for this one, right? Do you agree, Spencer, that this is one that should be at the top of this disruptible list?
Yeah, I can't believe this is still a $26 billion company, frankly. Has anyone in the chat used Expedia in the last decade? Please tell me. I'm very curious.
Hell no.
I mean, Expedia is worth more than SoFi. I mean, it's worth more than we're just looking here. I mean, Dow Chemical, it's worth more than XPO Logistics. I mean, I'm stunned that this is as large a company as it is, frankly. Rivian, Lululemon, wow. DuPont, it's big.
You're not naming like giant companies though. It's only 20.
I feel like I am.
All right.
All right. Whatever.
Look, looking forward to this week. You got two big industrial names, Walmart and Deere. I want to throw up the Walmart chart first. So looking ahead to this week. Oh, if you look at that base, it broke out about November of last year. What broke that base out? You say, Spencer? Right? Do you want to know? I'll tell you what.
Yeah. Tell me, please.
Throw up the earnings scorecard. Let's just take a look at the last 4 quarters here. In the Walmart, now this is the reaction trend, not the like fundamental performance trend. So what you saw is starting back in February 2025, market stopped rewarding this company for its earnings. You got a lot of sideways from February to November of last year. Sideways. It's that base if you go back to the chart. And then in November, I think it was November 20th, Walmart reported another nice report, and the market loved it. And that set off a 30% rally. So after a prolonged period of sideways consolidation phase for Walmart, you saw a nice reaction leg higher out of this base on the heels of the first positive reaction that the company had seen in the trailing 4 quarters. So the big question now this quarter is, does that trend, right, of being rewarded by the market for good reports continue? See that, Spencer? See all the red there? The negative reaction scores starting in February, negative. Then all of a sudden, boom, doozy, up 6.5%. Sets off a much larger rally of about 30%. So there has been a recent, shift in the earnings trend for Walmart. Does that continue or not? We'll find out this week. And the other interesting one is John Deere, which has been on absolute tear. You would look at something like this and say, wow, that is some pre-earnings drift. Right, stock's up like 25% here just this year, probably more like 30%. Did they pull forward a lot of gains? Right? Did they pull forward some gains for this earnings report? We'll see. Those are 2. Oh, and one more, Carvana, super sketchy. Carvana has been maybe like the most incredible story in speculative growth. They will write, Harvard Business Journal reviews about this. Future. They will. It's just what a crazy story. And if you zoom out on this chart, I don't think we brought the chart, but just follow along at home. Look at that level around 380-ish. That was the 2021 peak, right before a 99% drawdown was set off in this stock. A 99% drawdown over the course of like a year. And then guess what it did next, Spencer? Over the course of the next couple of years, Carvana went on to rally. Let me make sure I get this right. 15,000% back above those old highs, and the stock just breached that level. So this thing has nasty failed breakout written all over it.
Wait, what day? There was a short report. There was a short report out on Carvana a couple weeks ago. What day was that? That was
every day.
There's been a short report out on Carvana every week.
Every day. No. It was January.
Think about it.
It was January 28th. That's what it was.
Like they imagine these short sellers, they're often very intelligent, but they're just their egos don't let them live. So they wake up in the morning, they look at Carvana, and then they start pulling their hair out, right? And then they go and brush their teeth, and it makes them so angry. So that's one of the reasons. Like, I know these guys, they're smart guys. They're just like, this is ridiculous. They lose all this money, blah blah blah. It's a scam. I mean, I don't. The moment vending machine, dumb ideas, it turns out.
the moment they stop writing short reports on Carvana, I mean, look out.
Yeah, that's
look
right.
out.
No, he's right.
It's probably over. All right, so that's great. That's what we're looking for. And
one thing I want to add with the Walmart thing is, the chart speaks for itself. And typically when we see a chart like Walmart before earnings, we say, oh man, the expectations could not be any higher, right? Like they've got to beat it, like beat the estimates, and they've got to just crush them, right? Because if they don't crush them, then the stock will get crushed, right? So
you could say the same thing about Walmart and John Deere. Talk about heavy asset businesses.
Yeah.
That pre-earnings drift. They both enjoyed like 30% rallies just this year. Oh, hey, Asia. Yeah?
Yeah, this was to me one of the things that stood out the most. New all-time highs for the S&P Asia 50 index, which is about a third China, a bunch of Taiwan, a lot of Korea here, Hong Kong. Notice no Japan.
I've never heard of this one.
No, this is a big one, Spencer. This is a
big one. I've never heard of it.
I know sometimes I'm a little creative.
There's no Japan by design?
By design. This is an ex-Japan index, and this isn't like one of JC's like creative indexes. This is like a real thing. This is like a big deal. But by design specifically excludes Japan. So imagine if Japan was included.
Yeah. It looks just like the AAXJ. There's a couple of these funds
Throw
out
up the
there.
one with Japan so you can see the difference there. Woo-wee! Shout out to Japan. I was texting someone over the weekend, and they were telling me like, "Oh, I'll hit you back. I'm just taking off now, heading to Japan." I was like, "Good for you. Good for you. Go eat. Go enjoy yourself in Japan. Great place."
Yeah, it is.
I was listening to somebody the other day talk about how when he used to visit Japan before the internet, before like Google Maps. And in Japan, I don't know if you guys know this, there's no English in Japan.
I don't know.
There's zero English in Japan. Like you go to a lot of other countries, you speak English, you're fine. Not in Japan, right? So before like all this translator and Google Maps and stuff like that, exploring Japan, good luck. Good luck. So it's just like fascinating because, even with Google Maps and translation, it's still relatively difficult. I mean, it's fine. Like everything is amazing. So like, it's not impossible, but the concierge to help you get, dinners and stuff like that. Like the English is non-existent in Japan. Taiwan too, by the way. You're not getting any English in Taiwan. You get English everywhere else in my experience. How did you experience that too, Strazza?
Yeah, Japan, which we thought going in, because we did not know this, we assumed it would be the easiest to communicate.
It's the most Western.
The most difficult.
Yeah, because no English. Taiwan, they skipped Taiwan. I remember you guys were in the Philippines partying, and you were like, JC, we really don't want to go to Taiwan tomorrow. We're having way too much fun in Manila. Can we skip Taiwan? I was like, yeah, hang out in Manila. Get to Hong Kong a day earlier, I think is what I said, remember?
The reaction at the bar when I told everybody the news was absolutely epic. It was one of the great moments from the trip.
We were so tired. Comes back from the phone to tell everybody that he's staying. Wasn't it somebody's birthday?
It was my birthday.
It was your birthday.
It was my birthday. Yeah. We just wanted to hang out. We wanted to relax for a night. We had a great time in Manila. But the other countries too, JC, I think make an effort to help the people they know are not from there. Like there's a big, like people want to help you in these other countries. They know you don't speak the language.
In Japan too, by the way.
You think so?
Yeah.
People we met were like, fuck you guys.
No, I've been to Japan a lot over the years. There's a language gap, but they love Americans, dude.
Okay.
They love Japan. I mean, you go to France, you go to Paris, and they do not like Americans. But you go to Tokyo in Japan, they love Americans. So it's cool.
Yeah.
And Americans have different rules. Like they have their own rules. Like they're more strict among each other. Like, no, you can't smoke cigarettes on the sidewalk. You got to like huddle into this little phone booth thing. But Americans he was American. He's fine. Eating on the subway is like strict rule. No eating on the subway. But if you're an American eating the donut, like you're good,
Overall, the experience in every country, all the people were incredibly nice. It wasn't like Europe at all.
It's everywhere but Paris. I'm pretty sure everybody in the whole world is nice except for the Parisians. Shout out to Paris.
And
My wife hates Paris because everybody's so mean.
Me too.
I'm a city kid, so I don't think I think that's just how they are. Because people say New Yorkers are mean, but it's actually New Yorkers like the nicest people ever. They just don't have time to talk to you or want to talk.
That's
to you.
exactly
It doesn't make
right.
them mean.
That's exactly right.
New
Get out
Yorkers
of the
are just
middle of the
busy doing what they're
sidewalk.
doing.
If you're gonna walk slow,
You have
move
to
to the
understand-
inside, please.
You have to understand the culture in New York. People aren't being mean to you when they're ignoring you. That's just normal.
Yeah, they just don't want to talk to you. That's not mean. That's just
That's actually
that's called
not-
efficiency.
That's actually an East Coast thing. It's not New York. That's just the entire East Coast.
New York is strong in that.
We don't
in
want
that
to talk
way,
to
though.
you.
Speaking of
okay.
these, hold on, Spencer.
I remember when I
This
moved
is
to
important.
California, I was walking down the street and I'm just minding my own business. Some lady was like, "Good morning." I was like, "Talking to me?"
That was my
We don't wanna
experience
talk
when
to
I
you.
moved to Florida.
Me?
We don't want to talk to you.
I don't know.
I got to clear something up here for my fellow Florida man brethren.
Okay.
We don't eat the iguana meat down here. Even the people who eat strange meats don't eat the iguana meat. It's not a thing. The iguanas carry diseases. No one does it. These things are going viral on the social media simply because it's hilarious. I promise you, nobody's eating iguana pizzas. Nobody's eating iguana on a
No, but
stick.
there's a specific group of people that do eat the iguanas.
Dude, it is so
It's like a tribe. Yeah.
not really, though.
Yeah, they do.
What are you talking about?
You're talking about some of the Native American tribes then. I'm talking about people in the real world. Nobody
Oh, I
even
think
in
they
the
are
US
Native
eats
American
strange
tribes.
shit.
Yeah,
But
he's
they're
right.
not eating iguanas.
All right.
Everybody knows not to eat the iguanas.
Okay. Thank you
They're
for
a
this
high
PSA.
protein delicacy. Often
Thank you for
called
this
the chicken
PSA.
of the trees.
Thank you
Dude,
for this PSA.
That is the grossest thing I've ever heard.
Okay.
They are the nastiest animals.
Pollo
on
de
that-
los árboles.
Okay. Jesus.
Kill
And
them
on
all.
that note, we're bringing on Dr. Phil.
He would eat the lizards. It's high protein.
I don't know.
Eat the gators.
Bring on the pearl dog. What's up, my man?
I wish I was in Tijuana eating barbecued iguana. Come on, man. Mexican radio, Wall of Voodoo. What are you guys? You guys don't
Why
know
you,
that
look,
shit?
you got like a Steve Jobs vibe today.
I'm on a Mexican radio.
You eating iguanas these days, Perlman?
I'm on a
It's on the Perlman program.
Mexican whoa,
Right?
radio. People who remember that are gonna love that impression that I just did because I fucking nailed it. What's up, man? Wall of Voodoo. Like, what is that? Like MTV circa, I don't know, 1980s, 1980s. Had to be the 80s.
I wasn't
That goes
allowed
way
to watch
back.
MTV.
They had a hit. It was a one-hit wonder. Mexican radio eating barbecued iguana.
Are you eating that these days, iguana?
No, dude. Dude, when we visited the Everglades, we had alligator.
Yeah, that's pretty good.
Yeah. Yeah. It was the irony is it tastes like chicken. Like it was like chicken. You know what I mean? Like, you know.
In New Orleans, you can get the gator, like the sausage. It's good.
I bet that's good.
Yeah.
I bet that's good.
Perlman, I got a question for you, right? So
What's
in
up,
the
man?
Perlman program,
Yeah.
you know, cheese is recommended, right?
Yeah.
But to us, it is in moderation, right? So what's the cheese sitch in the Perlman program?
So here's the thing. Everybody is different, right? We have individual differences. And so cheese is one of those things, and nuts also, where it's kind of on this line where if you are overweight and you eat a ton of cheese and it's your poison, you can't eat it. Like some people can't eat one piece of cheese. You know what I mean? Like you have a piece of cheese, then you have another. Some people are that way with nuts. Nuts can be great. Like if you're, you know, like I can have some pistachios, right? But you know, I'm already lean. I'm already at my weight, and I don't have to worry about it. Some people take a handful of nuts and then another handful, peanuts, this and that, cashews, and then they're eating like, you know, 1,200 calories of cashews just
That's
sitting
me.
there.
That's me.
Right. So you can't eat nuts.
Right. So I
And
don't.
it's perfect.
I
So
put
it's the
some in
same
the
way-
yogurt, but it's in moderation on the yogurt.
Yogurt, you could just eat as much as you possibly
You know.
want. Like you know, you could just sit down with a huge tub if that's your thing, because you're just going to get, it's just super healthy. It's super nutrient dense. And you're just going to, you're going to eat till you're full, and then you're not going to eat anymore. And then you're going to wake up the next morning feeling fantastic.
Let me ask you another question. So I've never made my own butter, but my understanding is it's very delicious and super easy. You're just taking the heavy cream and you're just whipping it, and then you get the butter, milk, and then you get the actual butter, and you make your own butter. Have you ever done anything like that?
No.
I heard it's awesome.
I'm not like one of these guys who is like all super, organic and buying everything on the farm. I just, I just don't have the time and effort for it. I find that there's a marginal difference. The difference between,
because you don't find that fun. For me, I would do that with my kids, and we would have fun making butter. It would be like a thing to do.
We do it occasionally. I mean, I do go up here. We have a farm that's very close by. I go there and I get eggs. I go there and get tomatoes and watermelon in August. But I don't, I'm not driving an hour to get raw milk. Like, it's just not my thing. Like,
is that good
God
for
bless
you,
you
raw
if you
milk?
do it. What's that?
Raw milk, is that good for you?
Raw milk has become this thing among sort of the young based natural living people. And to me, everything's a shtick. You know what I mean? Everybody's like selling something. It's a shtick. I just want to live my life. I want to get some eggs. I want to get a steak. I want to get some good butter, throw it on the grill. I'm done. You know what I mean? I'm not thinking about it that much. But there's some people who are really, really into, and I don't fault them for it. It's funny though, because I see them, I see like these influencers, and they're really into like regenerative and raw milk and all this stuff. And then 6 months later, they're like selling, sandals and fucking supplements. So it's like, to me, it's a little bit of a racket. If you like it, great. Getting a really good piece of fish that is not farm fish, I can tell the difference. I love it, but I don't like seek it every single time I go get a piece of fish. I'm not like obsessed with that. Like, to me, the difference between Pringles and a steak and an organic regenerative steak, there's a huge difference. You know what I mean? Like, Pringles are bad. A steak that's not necessarily super pristine is way better than fucking Pringles.
Where do you fall on the grass-fed versus the corn grade?
Like, I love a grass-fed, but I don't need a grass-fed. I don't usually.
Do you prefer? What do you prefer?
I prefer steak, eggs, piece of fish that are good. That's all I care about. If I go to a restaurant and I have a grass-fed, or occasionally will treat myself and my wife and my family to grass-fed, fantastic. But I don't really get all caught up. I mean, if I go to a restaurant and have a great piece, a great ribeye, it's better than I'm going to make it. It's better than I'm going to buy.
You think so? See, my family is the opposite. They refuse to ever go to a steakhouse because they like mine better. And it's not
You're a better chef than I am.
Also, I make the steak the way my family likes it, right? Like, my wife likes it extra crispy. My wife, I give her the parts that she likes. I cut them all for all my whole family.
Beautiful.
They don't do that at the steakhouse. They make it the way they make it. So
you know what? I do that. I do the same thing. Like, I'll slice up a steak for my wife. Like, she doesn't like it like as rare. So I'll slice it up and cook it in a pan and get it crispy without it being raw on the inside. You know what I mean?
I'll make 2 ribeyes. I'll give her the 2 ribeye fillets, and I'll eat the outsides of both.
It's beautiful. It's beautiful. That's how you do. I mean, that's like, to me, that's like personalization. You're the chef. I do that in my family too. I know how my kids like eggs. I know how my wife's like steak. I know all that. And I cook it that way all the time. And it's beautiful. I got something for you today, though. I got something. I got 2 shout outs. I just want to say something about people that you believe in, right? People that you look up to, honor, respect, and love. And those people are unbelievably important in our lives. They can be our parents. They don't have to be our parents. They could be there, people out in the world who do incredible things that we admire. And I think now more than ever, I was down in Florida and it felt like criminality was admired. You know what I mean? Like that was like the impression I met. Like everybody had an angle. Everybody was like, and it was like, ugh, it was like, ugh. That's not my thing. But what I do, and that's kind of the world we live in. It's like what you can get away with. Like the IRS is not present anymore. And, like whatever. It's like everything's a grift. The grift is admired, not my vibe. I want to find people out there in the world that I admire for specific reasons that are truly admirable. And they're still out there. And I want to highlight two for two different reasons. First, yesterday, the women's bobsled, Ilana Myers-Taylor, 41 years old. She's been in how many Olympic Games? 2010, 14, 18, 22, fifth Olympic game, right? Never won a gold medal. One of the greatest U.S. athletes of all time in the Olympics. Individual bobsledder. 41 years old. Yesterday, she wins first gold medal. She won bronze. She won multiple silvers. She goes out there and wins a gold medal in the monobob. Unbelievable. Dude, like that, you're not hearing about her. You know what I mean? Like you're hearing about this kid who fell down. You're hearing about the speed skater, also great. Don't get me wrong. He's like 21 years old.
Lindsey
He's
Vonn.
the best since Eric Heiden. What's that?
Lindsey Vonn.
You're hearing about Lindsey Vonn breaking her leg. But this woman just quietly is one of the greatest athletes of all time. 41 years old, never won a gold. She goes out there yesterday, wins a gold medal in Europe against the North European bobsledders who are all great, the Sweden and the Netherlands or whatever they got going on. She wins a freaking gold. She is forever a hero of mine. Love her. I got one more. So that is persistence and consistency. Just going out there and doing the thing. She's not super famous. She's not on the bottom on the box of Wheaties. She's not doing the morning show. Maybe she will now, but never super double famous. Just out there getting it done, trying again, going back to the drawing board, trying again. That's number one. Number two is Steve Edmondson. You guys don't know him either. He's never on CNBC. You don't see him all over the place, hawking whatever. This guy runs $60 billion Nevada pension fund, state pension fund. He's been doing it for years. He's got one guy that he works with. He just keeps it unbelievably simple. He buys index funds. He's allocated well. He's got a small tranche of private equity, but mostly equity and bonds, Vanguard funds. His expenses are like 12 basis points. The pension industry is like 52 basis points. So he's winning alone on the fee. I mean, that's 40 basis points a year after year after year. He's been doing it for years. Plus, he doesn't trade in and out of positions all day long. Keeps it unbelievably simple. And that is somebody that I look up to, Steve Edmondson, Nevada Pension Fund, for the consistency and for the discipline and for the simplicity. Keeps it stupid simple. And he does better than, 70 or 80% of the funds that are out there. I forgot the last number. The last time I looked at it was over 75% of the funds he's beating before fees. So after fees, he's crushing most of them. Unbelievable performance. So Steve Edmondson, simplicity and consistency. And then Myers-Taylor for just this, persistence and doggedness and, never giving up. Unbelievable heroes of mine. And in this day and age where the grift is the admired thing, I just wanted to say that, you could find great heroes to look up to and admire and be your North Star.
Well said. Well said, Phil Pearlman. As far as like out there, you know, people like achieving things, you know. I don't know. I go through phases. You know, I go through phases. There's different times where I'm really, you know, focus on one person and their work, and you know, and others. You know, it doesn't have to be the same person always, right? That evolves with life.
Yes. I've had different ones. I mean, I never heard of this woman. I kind of vaguely remembered her from old Olympics, but you know, just was watching with my wife last night, saw this, then went and like Wikipedia'd, and I'm like,
the Olympics are coming to LA in 2028. Are you going to be?
Gotta go.
You know,
I mean, it's gotta go.
I'm going.
Kids. Yeah.
I'm going. I'm bringing the kids. I went to the Olympics in '96 with my dad in Atlanta.
Wow.
Never been. Never been, but gotta go.
Pretty cool. We saw like basketball. We saw weightlifting. You know, there was a Turkish weightlifter. His nickname was Pocket Hercules. Pocket Hercules, because he was a little guy, jacked. But he was like the best athlete like in the Olympics for Turkey, like their best chance to win. So as it turns out, but it was like the only sporting event that we could afford to go to at the time, or one of the few, because nobody wanted to go see weightlifting. So we were there, and for some reason we were in the Turkey section. So we were all the Turkey guys watching Pocket Hercules, and they're going Dookie-ya, Dookie-ya, Dookie-ya. And then the next day, you know, there's like 15 days of the Olympics, and every day there's like a magazine that covers what happened the day before. The Turkish section of the weightlifting was on the front page of the Olympic, going Dookie-ya, Dookie-ya, and the Pocket Hercules won the gold. It was like wild.
Nice.
Dude, that's awesome.
I
That's
remember
the
being 14
experience.
years old. I'm like, where the fuck is Turkey?
All right. Hey, let's wrap it up. If you're watching us on YouTube, this stream will end and automatically send you to our next show, The Open Bar with Steve Strazza at 10 a.m. Eastern Time. So stay tuned for that. But let's get out of here. Let you guys go trade. Markets are open. Have a great rest of your day. Go make some money, and we'll see you in a few minutes for The Open Bar.
Go
right?
responsibly and eat animal protein.
100%.
Always.
Eat a steak. Eat a big old steak.
Eggs.
Avoid the
eggs.
iguana.
Dude, your farts must be disgusting.
I'm on the Mexican.
I can't take no loss. I don't even know what it costs.